Hi friends, this is Denario Research and today I'll show you the biggest crypto bubble as of today. I guess this video may get many haters because I will talk about holy coin, Ethereum. Its price has reached new all-time high at $400 recently and finally price crashed. People around are going crazy about investing in these tokens. Tons of advertisements offer me to buy some Ethereums because it will repeat success of Bitcoin. And this hype around Ethereum makes everyone irrational about decision whether this is good or bad investment. What is Ethereum? Unlike Bitcoin, which is used to transfer value, Ethereum has different purpose. Ethereum platform is not about payments. It is positioned like a platform for smart contract, distributed applications, and ICOs. Well, to cut the long story short, if application does some work, its owner pays some fee to Ethereum miners. And the more applications are used, the higher Ethereum demand is. But do you know how many these distributed apps were released and are being used actually from February when pump started? Likely no one knows, and the price was driven by other factors. Let's figure out them. One of key drivers is ACO. Startups no longer need to pitch investors, make business plans and presentation. Things became much easier with Ethereum. If you need money for a tech company that plans to use Ethereum blockchain, just initiate ICO. Ask crowd on the internet to become your investor. Of course, investments must be made in Ether, and investors from the crowd will go to the exchange, buy Ether tokens, and send them to the company. Recent ICO of Bancor helped them to raise 155 millions of bucks in Ether. Frankly, I have no idea why startup needs such huge amount of money, but it's not my business. And of course, such ICOs push price higher to the moon and make this kid happier. But they also bring you risk. Big amounts of coins are now concentrated in hands of companies. Firstly, these companies have costs. They need to pay for facilities, development, and so on in fiat currency. Hence, they will not hold raised tokens. They need constantly sell assets to maintain the business. And unlike miners who pay mostly for electricity, their paycheck will be much higher. This will of course create some extra selling pressure. And secondly, success of ICO doesn't mean success of business. None of these companies failed yet, and crowd investors do not have experience of failure. Development of blockchain apps is totally new thing, and risk of having buggy software or not to have it at all is quite high. And if one such company fails and dumps its coins, it may cause chain reaction. Also, investors may stop buying new assets for future ICOs and cause lack of demand. Yet another price driver is media coverage of the Ethereum Enterprise Alliance. It is a big organization that connects top tech and financial companies that contribute to Ethereum protocol development. And people think that if Microsoft or Intel is in the game, there is nothing to worry about. But the information around Alliance is not presented correctly. Members do not use or plan to use existing Ethereum blockchain or Ether tokens. They work on Ethereum protocol to create their own blockchains for personal use. And hence, they don't actually affect the price of Ether. And of course, don't underestimate the role of Vitalik in price rally. Because he is Ethereum spokesman, for many people Vitalik means to Ethereum the same as Mark Zuckerberg means to Facebook. And every Vitalik's tweet gives Ethereum adepts hope and sense of coin stability. People are very sensitive about his sayings and his actions may directly affect price. Let's look at CoinMarketCap. From the beginning of the pump in mid of February, Ethereum price jumped from less than $10 to $400, and its capitalization increased from less than $1 billion to 36 billions in just 4 months. Just imagine 35 billion investments in such short period of time into currency that has a lot of security problems and, like Bitcoin, has problems with scalability. Doesn't it seem strange? Let's look at price chart. If you watched my video about pump and dump, you can easily recognize this pattern. There are several explicit stages here. Accumulation from the beginning of January till the mid of February. Ether was cheap and news didn't pay attention to it. Then pump started. Reddit and Bitcoin talk were full of news about Ethereum's bright future. Pump was accelerated on March 24, the date when Security Exchange Commission has rejected Bitcoin ETF proposal by Winklevoss brothers. I'm wondering, did they make a sad post on Facebook about that? But speaking seriously, what is weird that Ether was aggressively pumped right after SEC decision was published. I remember that because I had open short. But thanks to stop loss, I have saved my bank. Later, reaccumulation stage came and new pump on ICO's money. Closer to its highs, Ethereum has attracted non-crypto media attention, and crowd decided to become rich with ICOs. Distribution stage has finished with bad news about scalability problems, pending transactions, and flash crash on GDEX, and dump has started. For me, Ethereum remains cheap car driving 100 miles per hour on a highway, along with other cars, and with inexperienced driver inside. If anything happens to Ethereum, dump affects others. It's very fragile asset. Yet another security breach? Dump. ICO company has problems? Dump. Vitalik resigns? Dump. Ethereum actually has a great technology and it will have a big value in future. But today, people see it more mature than it actually is. That is why it is very overvalued and you must think 10 times before investing Ether. If you are good in margin trading, rather consider short. Basically, this price crash should happen to incline investing crowd to deeper analyze risks. Thumbs up if you like this video, subscribe to my channel if you want more videos, and leave your questions in the comment section below. Bye!